Hello, how do you do swing trading daily chart analysis of large cap stocks, upward large cap stocks if you are using long uptrend line swing trading strategy? You can use daily chart to swing trade to do your chart analysis, either maximum daily chart or 1 year daily chart. With long uptrend line swing trading strategy, 1 year daily chart may now show all your support lines or your trend lines that you target to be your entry point. Therefore, I like to use maximum daily chart. It's good to have your watch list of stocks to analyze on a daily basis after the market close to see how they perform during the day when the market was open, and to see if there is one that is well set for you to target to purchase next time the market opens. And today is March 8, 2025. The market closed yesterday, Friday, the 7th of March, 2025. We are going to analyze 3 stocks from our watch list, and the first one is CSL. CSL, we have our trend line that we will like to buy at if it pull back to that trend line. Right now is pulling back, but it's not quite close to it yet. Yesterday the price went up. That's why we have a green bar there. A green bar means at the end of the day, the price of these stocks was higher than the price in the morning when the markets open. And a red bar means the price at the end of the day was lower than the price in the morning. So, yeah. The next, but still is kind of far from where we like to buy at. Therefore, we are not going to do anything to it. We are just going to keep observing it. When it reached it's making lower lows. You can see this red bar. You compare the red bars delimited by the green bar. So this red bar, which is the last of those set, let's go to 1 year daily chart. Okay, so it's even within 52 weeks, 1 year time frame, it is the lowest point. So that red bar is lower than this one. It is lower. In fact, this one is higher than this one, but this one is lower than this one. And this one is lower than this one, which is lower than this one, which is lower than this one. So it is making lower lows. It's going down. When it start making a higher lows, this low is higher than this one. This low is higher than this one. This low is higher than this one. And so from when it start making higher lows, after 2 higher lows or so at the trend line, we can buy at the first or second green bar that will follow a pullback. But at the trend line, when it start making higher lows, a sign that it's down, going down, and start going up. It will be a good point to get in. The next one is DECK. I color it in blue because it could be going down. So it's going down and is even closer to the trend line. So I color coded on the watch list so that I know that those are the ones that are getting close to set. So you can see that it's making lower lows, which will, if you are trying to trace those support line, it will be a downtrend. You touch base with the trend line here, we have this one and this one. It breached this one and breached this one. So we'll just keep observing it to see if it's going to continue going down or if it's going to start going up. If it start going up from there, we will get in. So that's why we color it, because it pretty much reached the trend line that we like to buy at. It's quite a wide mountain here. When it touch base with it here and touch base with it here was in 2023, because you have is in 2024 mark, 2025 mark. So it was on the upside for over a year and then move back down. When it start going up from this valley is when we'll get in. So we'll just keep observing it. The last one we'll observe, we'll analyze is DOV. At this point, I could even put this as a blow as well, but it still have few ways to go to touch base with that trend line. But yeah, that will be something I will keep an eye on as well. So why not? Can put it in blue. So DOV. So right now, those two that we analyze with based on long up to long swing strategy that we are using, we are not going to buy them yet. So DOV is still higher up. Yesterday the price went up. We have a green bar there and the price is highlighted in green. So it's still higher up, could well be following a trend line here. Is nowhere near close to where we like to get in. We have this line and we have this one. So it touched base with this one a lot more recently than the lower one. And now one with the lower one, because they are not too far from each other. But yeah, we'll keep extending both to see which one. In fact, I can just color code this one as well to see which one is going to use to start going up. But right now it's still higher up compared to where we like to get in. So there is not anything we are going to do with it at the moment. So this concludes how you can do your chart analysis on a daily basis after the market close or before it opens again, early in the morning before it opens again. You can do your daily chart analysis of your stocks on your watch list, comparing where the price is to where you want to buy them, which are the uptrend lines or support lines, because those are large cap, upward large cap. They go up, they move forward. So the trend line passing by their support will be oblique, upward oblique as well. So you will compare where the price is to those trend lines that you trace and the one you chose to buy at, that you feel like it touched base with it in the past more than once and is most likely come back to it. You target those. That's why I color code them to differentiate them from the other lines that I have on the chart, and you just compare where the price is to those entry point. When it touch base with it and start going up, that's when you will buy at the first or second green bar. That will follow a pullback, and after you have about 2 higher lows or so, you can buy at the first or second green bar that follow a pullback. So a sign, you just want a sign that is down, going down, and it's ready to start going up, is when you're getting around the trend line. Not necessarily at the trend line, but around it. Could be above it, could be below it, but you just want that confirmation that it's down, going down, and start going up. That's why we want to see higher lows start forming. And when you buy, you will continue doing your daily chart analysis by comparing where you buy, where you bought the stocks, the shares, where the price is, and where you want to exit. For upward large cap stocks, the reach new high frequently. Therefore, you can target the next high to be your exit point. And depending on where you get in, if you get in at the valley, you'll accumulate a lot of profit by the time you reach the new high. You'll stay in that trade for a while. And before you buy, you can compare last time it touched base with that trend line, how it behaves. If it lingered around that trend line for a while before leaving, or if it left, for this one you can notice that it stayed a little bit around the trend line, a little bit there before it start going up, but not too much. So that can give you an idea, when you are trying to buy, to see if it will change direction. When it touch base with it and start going up, it pull back a little bit before it take off. So, but yeah, you just take cues from how it behaves. The price moves around that trend line before you buy. And to exit, you can look at the previous high to see if it continue to make higher highs, or if it pull back before going back up again. That way you know if you need to stay longer in the trade or exit at the first high. If you buy at the trend line, if you should exit at the first high, the previous one, then this one is another one. Or if you stay in longer because you might make other highs. Does that make sense? So those are things you have to consider just by comparing what happened before to see if there is a pattern there that keep repeating itself for you to lean on to make your decision to stay in the trade longer or to just lock in your profit and get out. And something to keep in the back of your mind is you are not trying to lock in all the profit that is there to lock in within this trade. You are just trying to lock in some profits that you are comfortable with locking in and get out. If it continue going up, that's fine. You just wait on it to get in again at the valley, or if there is a midpoint that it tends to fall back and move back up, and you want to combine long up to non-swing trading strategy to short trend and swing trading strategy, depending on the chart, you can combine both. But that is a decision you have to make based on the situation you have in front of you and how the price is moving. So analyzing the chart on a daily basis of those stocks on your watch list allows you to get familiar with those stocks chart and to understand their pattern better. And try to have a watch list of stocks that is easy for you to analyze within an hour every day or so. And if there are some that do not react well with the strategy you are using, you can flag them so that at the end of the year you can take them out of your list and go to your longer list to pull the one that you didn't have in the watch list to add it to the watch list for the new year. And over time you will have a watch list of stocks that you are confident trading and that react well with the strategy you are using. And if you just start out swing trading, large cap seems to be stocks that do not fluctuate quickly. That will be a good one to start with. You can find some that are less than $100 a share. If that's just one share you want to give it a try to buy, by allocating $100 per trade, that is okay as well. But yeah, by not dealing with a stock that fluctuates quickly, you'll be able to focus on practicing the strategy you are trying to swing trade with and go from there. With those large cap, you are not going to lose money quickly with them, and you are not going to make a lot of profit with them either. They are kind of stable in the short term. You are not going to make a lot of profit from them, and you are not going to lose much money. You are not going to lose money from them as well. and pick stocks that you can invest in long term. That way, if you buy, it turn out to be too early of an entry point for you, the price drop, you just stay in the trade until it comes back up. You are profitable and you can sell it for a profit. You don't need to sell it at a loss to carry your losses, because the stock can be invested in long term. Is a stable company stock. So yeah, and by swing trading stocks you can invest in long term, you'll pretty much cash flow those long-term investment stocks by locking in their fluctuation away from the trend line. You see the trend line that they are following there is upward trend line. If you invest in long term, your money is going to grow steadily along that trend line. But by swing trading them, you will be locking in this fluctuation away from the trend line. You will be locking in that profit instead of letting it go, because it's going to fall back to this trend line, go up, fall back to the trend line, and so forth. Instead of your money growing in piling up your money in the stock and let it grow over time until you sell it, to lock in that profit that you accumulated along the trend line, you can swing trade by cash flowing them by locking in those fluctuation. You see this big gap there, by locking it in. For instance, if you invest in long term, from whatever you invest in the past all the way to here, the price is going to be higher up. But by swing trading it, you see when I put my mouse here, anything above is something that you didn't accumulate. So by swing trading it, you could accumulate this profit in. And yes, by buying it here, you'll be buying it at a higher price compared to where you bought it from. But the profit you accumulate in will be more than enough to offset the price increase that you'll buy at here compared to somebody that bought it years prior, or compared to what you pay for it prior. But I think that just is, time will tell, but that's my view on it. When it comes down to swing trading those stocks that you can invest in long term, you have the choice to invest in them long term or swing trade them. But I just feel like there is less, you are less likely to lose your money swing trading stocks you could invest in long term. Thank you. We thank you very much for your time. We thank you very much for all your comments, and we thank you very much you all that subscribe to our channel. Thank you for watching our videos. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small, one trade at a time, $200 per trade or $100 per trade, and grow your account slowly from there. You can sell at a new high, or after you lock in a 5% profit or 10% profit, lock it in and repeat the process to continue practicing the strategy you are trading with. For tips on how to create your own watch list of stocks to swing trade, will you please check our playlist in the description related to watch lists. And we do have other swing trading related videos, and we catalog them in different playlists, and you can feel free to go through them to see which videos answer questions that you have. And those are example of videos that we recorded. Now all of them are published yet, and the playlist you will be able to find those those videos in is there. And we have series on watch list, how you can create your own watch list that we are publishing, and we are almost done publishing this one, and we have another series that we start recording that will follow this watch list series, to show you the different filters, as an example, that you can put any stocks you come across through to see if it is a good stocks for you to add to your watch list. You know, when you are handpicking stocks to create your own watch list, and once you have that watch list, you just swing trade from that watch list. Every day when you analyze it, if you don't find something a day, you just don't buy anything. But there will be some days that you'll find a lot of stocks that are well positioned for you to buy, and you buy them. And there will be days you won't find anything to buy, and you just don't buy anything. And there will be days that you'll have a lot of profit in the stocks you already have in your portfolio, and you'll decide to sell a lot of them as well. So, but you'll have those different days. Thank you. Do you swing trade? Which swing trading strategy do you use? Will you please share your experience with us in the comments? Thank you.